Hi, my name is Dr. Chainalin Senusat. I will be presenting the Corporate Finance FIN3701 today. And here is my recommended textbook that we'll be using is Financial Management, Principles and Applications, 12 editions from Professor Titman, Keown, and Martin. Here is the mark allocation, right? Basically, we will have like 2 quizzes and 10% each, participation 5%, midterm 35%, and the final exam 40%. If you want to get A, here is the step. If you follow these steps, I guarantee you will get A. Right? So step 1, please read your textbook that I recommend you earlier before you come to the class. All right. Step 2, print out the lecture material or the slide and bring to the class so that you don't need to take everything. Right? You just take some notes, some important notes that the lecturer mentioned. Third one, please come to the class. All right, come to the class. I know you have the right to absent, but this is not an election. Don't use your right. Okay. If you start to absent, what happened? When you come back, you have no idea what I'm talking about, and then you start to blame teacher, to blame material, blame everything but yourself. Okay, please come to the class and then participate. Right, this is the key to success, is to participate. Right, I can ask you the question, and you also can ask me the question. Right, so let's participate. Next step, once you're done, you go back home and review all the things that we learned right today. After that, you must have to do a lot of exercise, problem sets, mostly, at the end of the textbook. This one is super important. Learn by your heart. What does it mean, learn by your heart? Learn by your heart means you learn because you want to get the knowledge, not just because the grade. Right? You need to know every slide that I show to you. You need to know how important it is to your life. How can you implement every slide into your career? So this is very important, and all the chapters are related and connected, so you cannot just throw away. Once you finish chapter 1, you cannot throw away chapter 1 and go chapter 2 and 3 and 4. Right? You need to keep it. And last one, you need to repeat the first step. Right? I guarantee you get A if you follow these steps. Not only corporate finance, but all the subject that you're taking. So here is the topics. Here is the topic. Right? I will start out with learning objectives. Right? Introduction of corporate finance. Overview. Right? What do we do? What do the financier do? Right? And then we will go over of 3 business organizations. The goal of financial managers. Right? Once you become the finance manager, what should be your task? What do you want to do? What are you supposed to do? Okay. And the last one is the 5 basic principles that shape finance theory. Okay, we will talk about that. Let's start with the learning objective. Number 1, you need to understand the importance of the finance, right, in your personal and professional life or in your career. Right? You need to know how important the finance to your business. All right. After that, you need to identify the 3 primary business decisions that the financier need to do. Okay, so there are 3 jobs that financier need to do. Second one, you need to identify the key differences between the 3 major form of business. Okay, I think this topic you learn a lot from from high school, maybe your first year in the college. The third one, you need to understand the role, right, or responsibility of the finance manager. Okay, and number 4, right, you need to know the major 5 principles that shape the finance theory, especially the corporate finance. Okay, let's start out with the first one. This is very important question. Okay, this is how to manage the money. Okay, how to manage the money. By managing, you need to use art, right? I'm talking about qualitative and science, right? More quantitative, to raise the money or capital and use them to invest to the profitable projects. So the finance is integral part of the corporate world, right? Finance is one of the most important part of the business, just like the blood in your body. Let's say you work for the Toyota, right, the car manufacturer. And imagine when you get to the firm, you will see many departments, right? Here is the organization chart. The biggest boss of the organization chart must be the stockholders. How do you become stockholders? By buying the stocks. You just call your broker, right? And you become part of the owners, right? And the stockholders are responsible for what? Electing the board of directors. And the board will hire the CEO, right? Or chief executive officer, who act as the agent of the firm. They also have departments working under the top management, like research and development vice president, marketing vice president, production VP, HR VP, and of course, finance VP, right? We have the nickname for finance VP, CFO, or Chief Financial Officer. This picture shows you the value chain. That is the interlinked adding activities that convert inputs into outputs, aka profits or margin, which in turn help the firm create competitive advantage. Our value chain typically consists of the primary activities to deal directly with your product and service, like inbound logistics, production, outbound logistics, sale and service, and also supporting activities like infrastructure. Now, the finance is in infrastructure, right? Finance and accounting, R&D and procurement. So these supporting activities do not actually deal directly with customers, but they are very important to help or support the primary activities to generate profit. Accounting is the business language, right? So without accounting, you can forget to do the business. Business language that support the finance. Financiers need accounting information such as the financial statements, right, to make the key decision. Okay, what kind of financial statement that we look for? Number one, income statement. Number two, balance sheet. Number three, statement of cash flow. And the last one, statement of shareholders' equity. So accounting we deal more with the past information, right? And finance we deal more with the future information, because we will be using the past information to make the future decision. Okay. If you want to become an expert of finance, there are actually 3 courses at least that you need to take. Number one is money and capital markets. Number two, investments. Okay, it will teach you how to invest wisely. Number three, risk management. What is risk? Risk means uncertainty of what you expect, right? So you need to manage the risk. Okay, we have operating financial risks, or systematic risk and unsystematic, and we have so many kind of risks, so we don't actually talk about this chapter. And the last subject that you need to learn is this subject or this course, corporate finance or financial management. Once you graduate, you can work for financial institutions such as commercial banks, mutual funds, investment banks, or any financial department in any firm. Okay. So let's talk about the goal of the company, okay, or the goal of this subject. That's why we're here for, right? So it is to maximize, this is very important, to maximize the shareholders' wealth. What is wealth? When you are wealthy, you have a lot of money. Yes or no? You have a lot of money. So wealth of the shareholder is equal to the number of shares or the number of stock that you have, or the firm has, right? Multiplied by the company's stock market price, right? So in order to maximize the wealth, you must maximize the market price. Okay, so what determines the market price in the long run? So how come market price increase? Of course, right? There are more demand than supply. How come more demand than supply? People need to keep buying the stocks, right? And then bid up the price to go up. What caused the people to buy the stock? Of course, right? They have to make sure that your firm is going to make a lot of money or a lot of profit in future. So your job is to maximize the market price by maximizing people expectation. Okay. Okay. So the goal of the finance manager is to maximize wealth or long-term profit. What about short-term profit? Should it be short-term instead of long-term? The answer is no. For example, if around 15 years ago, Apple, Apple company, right, decided not to go with iPhone, so they can cut R&D, right? R&D expense. What happened? If they cut R&D, it will cause net income to become what? To become higher. But what actually happened? Apple can make a tons of money by selling iPhone, right? That you're using right now. Okay. What about risk? Isn't risk important at all? What is risk again? Risk is uncertainty of what you expect. One way to reduce the company risk is to buy or have insurance. So you got to pay what? You pay premium, right? You buy insurance, you have to pay premium, and that makes your net profit to what? To decrease. Yes or no? Because this is your expense for the year that you pay premium. Okay, and that costs what? That net profit to become lower. Okay, that was the great decision for Central Department Store or Central World, right? To buy insurance. The point is, you got to trade off between risk and the return. Okay, not just try to maximize risk, but you need to minimize. Not just only you maximize return, but you need to minimize risk. So here's your goal, right? Trade off between risk and return. All right, so the goal of the firm should be maximize stock price subject to minimize risk. So in order to maximize well, you need to maximize the market price. You can look and check at the corporate mission, like Coca-Cola, right? To achieve sustainable growth, we have established a vision with clear goals, maximizing return to shareholders. You see, return to shareholders, while being mindful of our overall responsibility. Look at Johnson & Johnson. Our final responsibility is to our stockholders. When we operate according to this principle, the stockholder, again, see, stockholders should realize a fair return. Look at Google. This one make the most sense to me. Optimize for the long term rather than trying to produce smooth earning for each quarter. Right? You see long term rather than short term.